Hey traders, welcome back to my channel. This week I'm going to share with you a recap of my week day trading pound dollar in both my live account with Vantage as well as my prop trading account with the 5%ers. It has been a frustrating week for me. I'm going to talk with you exactly why and share with you every trade that I have taken this week. So if you are looking to maybe build upon your day trading skills, day trading Forex, keep watching. I'm going to share some super tips with you. Or if you just want to see an insight into the average day trading experience, then keep watching. As always, all of the software that I'm using will be linked in the description below. Remember to like and subscribe to the channel, and let's get straight into it. Before we get into the nitty-gritty of my trading experience this week, I think it's really important to just share with you a quick disclaimer that I am, first of all, the obvious, not a financial advisor, and all of that you can find in the description below. And alongside that, I am a really tired mother at the moment. My little one, who is 7 months old, is teething this week, so I've had very little sleep. Now, I'm not saying this to make any excuses for my trading performance. On the contrary, I've actually amazed myself because I think I've done really well this week to not end in the red. I think that is a win. I'm merely saying this because if I make any stupid mistakes in this video, you're going to have to just forgive me for it because I'm working on very little at the moment. But anyway, let's get into the... Here you go, there's the proof right there. Anyway, let's get into it. So here I am, I'm in Metatrader 5. This is the platform I use in my prop trading account with the 5%ers. And let's go into the history. And I'm going to just sort this by this week, the week starting the 15th of April. Now, I have taken a few trades this week. I traded on the Monday and I had a really nice win. I made 1.5 R on my account, so I'm risking a very small amount per trade. So that equates to roughly about 0.5% win on the account. I didn't actually trade Tuesday, that I will talk a little bit more about in a bit. And then on Wednesday, I took a couple of trades here, which actually got out break even. Now this was a frustrating day, which again I'll talk about in a moment. The bottom line is this week is that I could have ended up making 5 times my risk, but instead I've made 1.5 returns. So I'm still green, and green is good, and I've hit my weekly target, so I'm happy with that. However, it's always frustrating when you limit yourself, when you know you could make more money, and so that's why it's been a bit of a frustrating week for me trading. Regardless, hopping on to TradingView here, my charting platform, who I've been with for many years now. They are fantastic. This is actually a little trade I've not taken. I've just planned this morning during the London session, but I've decided to not trade now because if I trade now after this frustrating experience, it could slip into some emotional trading. So that's my own personal rule there. However, it's looking like it could be a nice little opportunity here for a short at this IPL. Now, I'm going to hide everything from you, all of the drawing tools, everything, and let's go back in time to the Monday, and you can see, even if we're on the 15-minute time frame, you can see here the play out that has happened this week. Now, from Friday of last week, we saw this major drop down, so we have been in this overall downtrend. However, this week, if you've been trading GU, then you will probably agree with me when I say that it has been fairly choppy. We've been in this kind of sideways ranging experience this week. We only really saw a strong breakdown on the Friday morning, this morning that I'm recording this video. And at the moment, I'm not convinced that's going to be a strong continuation to the downside. In fact, if we just go back to the daily time frame, where you can see a little bit clearly for those of you who prefer the larger time frame, that we have been, as I say, in this downtrend. The big drop down on the Friday. Monday, we kind of had like a rejection of the highs here. We made a slightly lower low, but for the most part, we seem to be curving. Now, the question is whether this is going to just be a slight little pullback before we have another big drop down, or, of course, whether price is starting to see a more longer term reversal and maybe a deeper pullback up to these levels here. That's something to think about for next week. But let's stick on topic, reviewing this week, my trading performance. How did I trade this sideways ranging market? How did I manage to profit even though I've been working on very little sleep? So I've taken my candlesticks back here in time to the Monday just at the New York Open. Now, the trade breakdown I'm going to share with you is my usual day trading strategy. I utilize a few different indicators, so let's add those onto the chart now. Firstly, we've got the previous daily high, previous daily low, And then I also add round numbers and above. So these two indicators are basically using key daily levels and also institutional price levels. They are the foundation that my trading decisions are made around, in addition to other analysis techniques such as analyzing market structure and utilizing a Fibonacci retracement tool. So what did I do to decide on Monday's trade? Well, first of all, because we had been in this big pullback here, what I did was calculate where I thought price may pull back to, because overall we are trending lower on the larger time frame. So to do that, I used the Fibonacci retracement tool. I took it from the high of the previous pullback and I dropped it down to the low. Now I've zoomed out here just to save going back and forward to the daily time frame. We're using the larger swings here. And I'm going to mark these three levels, the optimum trade entry levels, so that I can just remove my fib. So this little box I've drawn out is the point using the Fibonacci retracement tool that I believe price will pull back to, respecting the larger time frame market structure, namely the daily time frame. Now at the moment, Monday morning, we have seen a pullback. We are trending higher intraday. So intraday, we are swinging higher, and long term, I'm expecting price to come back to this level. So combining those two factors, I looked for a long Monday morning. But where to get in long? Well, I used my Fibonacci tool once again. So where did I place my Fibonacci? I placed it at the lowest point of this swing here, and I dropped it at the current high of day. Now, the reason that I particularly liked this Fibonacci retracement for an entry long is because it also coincided with the institutional price level, which is here at 1.2450. So I set a long position straight away. I set it at this 1.2456 level, and I had a larger stop placement, 20 pip stop, because I wanted it to be underneath this little range here. We had these strong mirror bar candlesticks. I thought that price would respect that level. It was a good place for a stop. And to begin with, it was Monday. I didn't want to aim too high. I used a 1.5R target to just gain the profit on the day using this intraday market structure. So the New York session opened, it instantly triggered me into this trade. We had a big wick rejection of this area here, and price immediately pushed up to my target. So it was a fast, satisfying win on the Monday. It was a great start to the week. And for those of you who like to see the real data, you can see the trade I took here, 1.2456, my stop loss, my take profit. And I got out here, and this is the profit I made on that account. I also took this in my live account. Moving forwards in time now, here we are on the 15-minute once again, but for Tuesday. And as you can see, price did continue to swing lower. It made a new low on the Tuesday from the following lowest point. But then we got this interesting pattern in the London session. We got a strong sell-off down in line with the news release at 7 o'clock. But then we immediately got a push up here and a close above this little structure intraday. Let's zoom in a little bit more to that. So intraday, price had opened here. We made a very small high and a low. So we are swinging lower. We made a pullback here and a drop down with strong momentum, but we immediately got a push up, breaking the structure, closing above it, and it creates this V shape. It's not a gradual pullback, it's a strong pullback, which to me indicates a shift in the trend, a change in behavior. And so I thought that this could be a good place to get into for a long. It's also broken this key daily level, but then closed back above it with momentum. So these are all areas of confluence that formulate a trade plan. Drop into the 5-minute time frame just to get some more detail here. As we started to swing higher, I actually thought that this area would be a good place to get long at the key level, and a once again a larger stop of 20 pips here, and aiming for a 1.5R target initially, which would have made a new high of day, and it would be coming into this area over here. Because long term for this week, I thought price had a chance of retracing up to this daily structure. Now, as price dropped down and it kind of consolidated at the entry of my trade plan, I hesitated because I was already up on the week, and at this point it was around about 20 to 9. So I was kind of really busy being a mum, getting the boys ready, getting their breakfast, and I just basically missed the trade. I kind of planned it, didn't set the trade in my broker because I wanted to just see what price did first, but that hesitation caused me the trade. So I didn't get into this. And although it did consolidate, there were plenty of opportunities to get long here. Ultimately, price just went up and hit that target. So that was the first frustration, because I kind of thought to myself, oh, I should have just trusted that plan, trusted the structure, the analysis, the stop, all aspects of the trade plan. Should have just trusted it and set it. And if I did, it would have doubled my profits on the week. So that was Tuesday. Moving on into Wednesday now, I made some adjustments to my weekly plan. Now, although this was the long-term area I felt that price would be pulling back to like a magnet, I also acknowledged the fact that from that Friday close, we'd had a swing high on the Monday, and then on the Tuesday, we'd made it a new low. So we had a new structural point here to use to calculate another potential retracement on price. And so I used my Fibonacci retracement tool from that high that was made on the Monday, and I dropped it to the current low of the week here on the Tuesday. And once again, I highlighted these 3 levels of optimum trade entry with my box to remove the fib, just to keep my charts nice and tidy. And zooming in here now on intraday, we can see that price has come back up on the Wednesday to this area, and it's making a very interesting pattern. Interesting because it broke the key level on the daily, which was the previous daily high. Now, ordinarily that would mean for me I'd be long biased, except for the fact that it was hesitating. See, overall we've hit this fib. We know we're in a downtrend. This fib represents a pullback opportunity to get in for a short, and it's in confluence with this key daily level. So we had a little pullback here. We broke a high, but we had this interesting bearish candlestick down. This is a take on mirror bars, because we had the strong push up and then the instant pull back down. So price is pulling back. At this point, I dropped to the 5-minute time frame because it just gave some more information to really analyze what price was doing. And there are a couple of things to be aware of on this time frame. First of all, I was aware of this little order block that we had here. Price came down to this order block just below the institutional price level, and it bounced off it and it pulled up with momentum. Now at this point, I felt that if we're going to continue pushing up, if that long-term reversal is in play, if price is going to be drawn to this structure up here like a magnet, it's going to happen now. Alternatively, if this Fibonacci from this weekly swing level is going to be respected, if it's a false break of this key daily level and a liquidity grab, then this could be a good area to get short. So at this point, I wanted to just see what price did. If it was going to go up, I expected it to happen now, and if it hesitated, then I would be interested in getting short. And that is the key information right there. Let's zoom in on this pattern. It pushed up here with momentum, we had a little pullback, it pushed up some more, we had a pullback, and it pushed up again. 3 attempts at pushing up, then it broke down, breaking both of these little levels here with strong momentum down. To me, that indicates a failed breakout. It's trying to break out to the upside, it's failed and it's coming down. So for me, that was a great place to set a short position. And I set it on a retest of this little gap here, this fair value gap that was created. I had my stop quite tight actually. I had a 10 pip stop because I thought if it broke the structure, it would run up past this daily level and it would probably continue going up. And initially for this, I was set a 2R target because if it's not going to go up, then it's going to come down, and I wanted to capitalize on that. So this was my trade plan for the Wednesday. I got triggered into that trade and rather beautifully, price dropped. However, as it dropped below the institutional price level, which for me was below 1R, I actually messed with the trade and I adjusted my stop to break even, because at this point I kind of felt like it was going to drop quite strongly. I thought the chances of it returning to my entry were quite slim, so I adjusted it to break even. I was protecting my account. The weekly profits I had already gained, I was protecting. I wanted to walk away a winner this week. But this is what happened. It came up, it stopped me out. Then it dropped. And dropped and dropped. And in fact, it ended up being a potential 3R winner, but obviously I got no R in this trade because it stopped me out break even. which are these two trades here. The first was actually a buy I attempted for the bounce off the order block, but I did set a tight stop when it appeared that we weren't getting the breakout I was looking for, and that's where I immediately switched short. But unfortunately, it didn't work out. I got stopped out break even and the price went without me. So I'm sure you can understand why it's been a frustrating week trading for me this week. And so here we are, once again, 50-minute time frame, looking at each individual day as it played out this week. It's been a pretty choppy week. Intraday price action has been up and down, and there's been no clear trend. It's been ranging. I think it's always best in these conditions to be more conservative, to sit back and to just be grateful with profits that you get. And that's pretty much the mindset I've had this week, and I am happy to finish green. It could always be better to make more. That is the nature of trading. But I'm currently reading a book, The Psychology of Money, and it's really helping me out with my trading psychology because it's just helping me to become aware of those qualities, like being aware of greed, how much of an impact they can have. It's just so good to be aware of that and incorporate that into your trading. But just hopping onto my dashboard here with my prop trading account with the 5%ers, you can see my equity curve has regained some profits again. I'm back at all-time profits this week, which feels amazing. I had a little bit of a dip over the Easter holidays where I had some losers and a bit of a range myself, but for the most part, we seem to be going in the right direction, which feels great. So I'm currently in profit on the account. I haven't hit that target yet, but I am heading there slowly but surely, which is my approach to trading, steady and safe. That's the way I like to play it at the moment with this account. Because ultimately trading for me is about the long run. It's about compounding. It's about taking it steady, rolling that snowball and allowing it to grow naturally and knowing and trusting that it will. It's about the process and not focusing too much on the destination. But I find the dashboard here to be a really useful resource with the 5%ers. It gives me some statistics that help me to just take into consideration to build on for my trading, such as the profit factor. This was a bit lower. I'm managing to get this up a bit more, which is nice. The accuracy rate, it's not brilliant, but it's profitable, and that's all that matters to me. And for those of you who aren't aware, the 5%ers, they're a prop firm I'm trading with, so they offer different programs. You have to basically pass a challenge and then you can access a funded account trading their capital with them. So they offer multiple accounts. The one I'm in is the hyper growth, the instant funding account program. And what I like the most about it is that it has an unlimited time to pass. So you might see here, you've got inactive days because you can't be inactive more than 21 days, which for me is fine. That means I've got to place at least one trade in 3 weeks, which is totally doable as a day trader. But there is no limit on time, so I could take years to pass this challenge if I want to, although that's not the intention. Previously, I have taken the high stakes challenge with them before, and unfortunately I wasn't successful with that, but that was because it was a different point in my life. I was literally giving birth to my second child. It was very stressful, and it's not a good idea to take a prop challenge when there are major events happening, in my opinion. If you want some more information about the 5%ers, I have got a link below in the description. Do check those out. And if you do feel ready, check out their programs and see if there's one that's right for you. Meanwhile, if you want to find out some more information about my trading style, I have got some different videos I'll link to above. I've also recently released a book, an ebook, which shares pretty much everything you need to know to get started day trading Forex. So there's a link below to that in the description. If you've enjoyed the video, let me know by hitting that like button. Don't forget to subscribe to the channel, and I'll catch you in my next video. Thanks for watching. Bye.